Good morning, my brothers and sisters. Happy Capital Preservation Friday, and welcome to the Place Your Trades Network. We are the network that does focus, however, on trading daily options using CME Group's event contracts to trade E-mini, S&P, NASDAQ, Dow, Russell 2000, gold, silver, euro, crude oil, natty gas, and copper. Today's broadcast is brought to you by Tradebait, which has built a custom app dedicated to trading CME Group event contracts. This is what we're all using on the Place Your Trades Network. Use the link right next to this video to check out Tradebait's web app for free. If you're a subscriber to our site, open a Tradebait account before March 1st and you will have a chance to win a bunch of prizes in the months ahead. One of those giveaways will be a trip to Las Vegas where you will join the Place Your Trades team at the Money Show in April. So be sure to share this page with your friends so you have a chance to join us in Vegas. I'll be in Vegas. I don't like Vegas. I've only been to Vegas a handful of times in my life, but I'm going. I'm going to go because you guys will be there. I love trading. I love talking about it, and I love talking to traders about it. Anybody that opens up a trading account and puts money into it in order to better their lives and the lives of those that they love is worthy of my respect. Anybody that wants to get up and fight and battle every single morning in order to better their lives and to be the best version of themselves that they can be, is somebody I want to be around. Trading is the great leveler, right? It's a level playing field. It truly doesn't matter. Nothing matters. You got $1 million account, you got a $100,000 account, you got a $10,000 account. It doesn't matter how long you've been trading, 25 years, 5 years, or 5 days. Every single trade that we make has the potential to make our wildest financial dreams come true. Conversely, every trade that we make has the potential to crush us too. So we got to protect ourselves from ourselves. Capital Preservation Friday is a reminder that every single day, every single morning, every single trade, I need to preserve my capital. I need to bank spiritual capital, emotional capital, physical capital, so that I can bank financial capital and I can continue to grow that financial capital. I've been trading for 25 plus years, and in those 25 years, I have ruined way too many weekends trying to do too much on a Friday, chasing missed opportunity, chasing lost money. I've ruined way too many weekends by trying to accelerate capital on a Friday and not preserve capital on a Friday. Fridays are days to remember that I don't lose money, I spend money. That's the whole point. The beginning balance of my statement is what I want to protect. If I've got 100,000 in there, I don't want it to be 80. A $100,000 account is not risk capital in my mind. It's inventory. Whatever you've got in your account, it's inventory. I need that money in my account in order to be able to be part of the market and to make money. That's what it's about. A trader that I mentored told me that he's got like $500,000 in his trading account because that's what he's willing to lose. We talked about size and what he's trading and things like that, and we properly size his trading account. Anybody, that's way too much money. And it's not money that we're willing to lose. That's not the way I look at it. I want to spend money to make money. That's it. So if I've got 100,000 in my account, I don't mind spending a few $1,000s in order to make a few thousand, right? That's the whole idea. Spend money to make money. Capital preservation, one trade at a time, one brick at a time. I am bullish. I don't think I've kept that a secret either on Twitter or certainly in my group with my traders, in my picks every single day. All of my picks have been bullish to the upside picks, except for the other day when we broke it. Thought maybe we had a chance of trailing back down. Yesterday, I ended up having a pretty decent day. Even though I came in long and I came in bullish, I made money on the short side. The S&P opened up at 40.58. The opening range was 40.58 something to 40.60 quarter. We had a gap that we left the night before at 40.39.5. We came out of the opening range and attempted to rally. The algorithms and the HFTs and their algos could not get the market above the opening range, and so we started to come back and we trailed off. So I got short, and we filled that gap down to 39.5, made a low of 40.28 or whatever. And then the market came back up to the opening range, and I got long again, stopped out overnight. But that's the point, is that I traded the market as it was, not as I thought it should be or what I wanted it to be. I didn't trade my opinion, I traded the price action as it was at that moment. I defined my trade, I defined my risk, so I got short at 58. Remember, I spend money, I don't lose it. So the market goes bid into the opening range, I get out. Think of the opening range as a room. If the market is inside the opening range, I want to be flat. If we're below it, I want to be short. If we're above it, long. It's that simple. It's my pivot, it's my trade definition. One of the things that Anthony and I were both taught from one of our shared mentors, Mickey Hoffman, was before we take a trade, any trade in any market, whether it's in the futures market, stock market, options market, or event contracts market. And this is why I love event contracts. The whole idea is that we know our second trade first. In other words, know where you're going to get out for an expense, know where you're going to get out for a profit before you select the trade. Don't let your trading select you. So if you can define your trades that way, if you can define your risk, if you can define your profit, then you've got trade definition and you can go ahead and take that trade. If you don't have those things defined, then don't trade. Don't take the trade, because the market is going to give us plenty of defined risk. It's going to give us plenty of defined trades. So event contracts give us that trade definition. I know that I'm not going to spend more than $3 or $5 in order to make 100 or 150 or 70 or whatever it's going to be. I know that I'm purchasing that trade. I know what my second trade is before I take my first trade. That holds true in any market, whatever it is you're trading. Know your second trade first. What don't we fade? Late day Friday strength. We don't fade late day Friday strength in a market that is in rally mode. We don't fade late day Friday weakness in a market that's breaking either. So I'll take the yeses. My 4-star pick would be the yeses above 40.75. I think that's a no-brainer. Last week or 2 weeks ago, I had talked about the NASDAQ, or I tweeted about it, talked about it with my traders. Everything hinged on the NASDAQ holding 11,327. If the NASDAQ held 11,327 much lower, and the S&P held 3912, then the market has, the NASDAQ especially, had to get and attack the 200-day moving average, which is roughly 12,040 in the NASDAQ. Right now, I think that both of the indices, all three of the indices, are kind of hinging on the NASDAQ getting above that level. The NASDAQ has not been above the 200-day moving average. It hasn't closed above it since September. And there's a lot of contracts traded in the NASDAQ between here and there. So right now we're trading at 12,400. We're trading at the 200-day moving average, and we're going to open at it. So for me, I might actually trade NASDAQ this morning because I want to trade where I've got the best trade definition. So I know where I'm wrong. I know where I'm right. I know that I'm right above the 200-day, and I know that I want to get out below the 200-day. Margie Teller, who was one of the, if not the biggest futures trader ever. She was a small, not a very big person, not a very big woman, but Margie was, Large Marge we called her, was the biggest futures trader, perhaps the independent futures trader in the world. She was 10% of the back month euro dollar open interest, not just the volume, but open interest. For a while, I was 10% of the NASDAQ volume. There's a difference between being 10% of the volume versus open interest. Anyway, Margie had a conversation with a group of young traders, and she said, you've got the same moving averages, you've got the same as each other, you're looking at the same studies as each other, you got the same support and resistance levels as each other. What makes you different than you? That right now is in my mind with the NASDAQ opening at the 200-day moving average. Everybody's looking at the same moving average. So what separates us from each other? There's a very, very fine line, that separates traders that struggle from traders that are consistently profitable. It doesn't have much to do with information. I was under that misconception when I left the trading floor and I came onto the screens full time, is that I didn't have enough information. I didn't have enough knowledge. I didn't have enough something or other, whatever it was. When ultimately, when I started the trade and I went from 100 lots on the trading floor to 1 lots on the screen, what I discovered was that my process of trading, my methodology of trading on the floor was adaptable to the screen, but I had to do it slowly. I had to give the market my time, not my money. That helped me learn how to separate myself and to be consistently profitable using the same basic information that we all have direct access to. So what makes me different? I know how I'm going to manage my expenses and how I'm not, and how I'm going to limit my round turns on Capital Preservation Friday. The event contracts give me the ability today to be able to do that in a safe and effective manner without over leveraging, okay? And that is the point. So Take it easy. In going to the Place Your Trades website, there's a chat. We all kind of type in there, communicate in there during the day a little bit here and there. Go in there because you got so much talent here, from Swing Pony to OG Strat to world-class people, well-known, experienced traders like Tracy, Shy Girl, and Anne Marie. Oh my gosh, what a group of people with Julia Cordova. My gosh, it's great. Go into that chat and see what all of these traders are talking about throughout the day and how things change. So Anne Marie trades her straddle, I think, is something that is very, very effective in these markets. If we open up, set the opening range, and we take out the lows, then the no's underneath 40 quarter are certainly in play. We don't fade late day Friday strength, and we don't fade late day Friday weakness. If we open up above the opening range or below the opening range, I'm going to be long above it and short below it. So I don't like making my picks until after the market opens. What is my second trade? I need to know my second trade first, right? Once the market opens and I stick to my process and I see what the market is trying to tell me, I can go ahead and I can take my trade because I know what my second trade is. The event contracts gives me the ability to know my second trade right away. Anything can happen in these markets at any time, and you have to prepare for any eventuality. You've got to be prepared for the market to rally, to break. I'm prepared to trade S&P, NASDAQ, bonds, gold, and crude. So there's a lot of interesting things in the market going into FOMC next week. The all-important February meeting. Holy smokes, this is going to be fun. Next week is going to be fun. Let's see if we're going to do anything on a Friday. Oftentimes in front of a huge FOMC meeting like Friday, we're going to have some continuation to the direction of that market. So as we head into the all-important meeting next week, we have to be prepared for the market to do whatever it is that the market will do. These event contracts are going to give us the ability to be able to define our risk before we start to over leverage. Trading is the best business that has ever been invented. It is the last bastion of capitalism that exists, at least in my opinion. I'm biased because I never really did anything else. So I love this job. I love that everything that I do every day is different. I love that I'm challenged constantly to overcome myself and to be better, to do better, as my mother would say, to do better, to be better. Every single day I'm challenged to be a profitable trader, to become a profitable trader, and to remain a profitable trader. As we all are in a state of being and becoming in life, we are all of us traders are in a state of being and becoming and continually repeating that cycle over and over again. That's the grind of trading. The grind of trading is doing the same thing over and over and again so that you can determine your level of confidence, carefree, fearless, and focused. I tweeted about that yesterday, retweeted a trader who's talked about being CCFF, confident, carefree, fearless, and focused. Today, I am confident, carefree, fearless, and focused. I am bullish the market. If we open up below the opening range, I will be short. If we don't do anything, I'm going to shut it down quickly, and I'm going to come back Monday and see what we do. I am not going to overtrade on a Friday. I'm going to preserve my capital. I'm going to look to the event contracts after the open, and I'm going to make my picks then. So have a wonderful weekend. Spend time with those that you love. Make sure people know that you love them so that you can allow yourself to be loved too. We're all in a state of being and becoming. God bless you all.